Welcome back, everyone, to Stock Market Weekly. I am your host, Evan Medeiros, back with another episode for Friday, May the 10th, 2024. Hope everybody's doing well out there. Good weather's coming right around the corner here, getting very sunny outside, temperatures rising, feeling pretty good. So let's get into the headlines. Markets are feeling pretty good. Every sector this week closed in the green, and the S&P 500 is now just 0.5% away from its all-time highs, right? Just recently, we were in this pullback mode, kind of turbulent mode, and very quickly, 2 weeks later, we are pretty much back to all-time highs. Now, dip buyers also coming back for some of the commodities this week. Gold, silver doing well. We're going to talk about those charts. We did get a bit of a rollover, sort of a noticeable rollover or some selling pressure in some growth stocks on Friday. We're going to take a look at a few of those charts. And really, this week, I think, wraps up one of the lightest volume weeks all year long. So lots to talk about in today's video. Stick around. All right, we are back. We've got TC2000 in front of us. That's a charting platform we're using throughout today's video, and we do support the platform here at the Trade Risk. We support Warden TC2000 traders. So if you need something built for this platform, if you want to work with me on some custom indicator or scan, reach out to us. Head to the website, thetraderisk.com, and check out everything we have available for TC2000 traders. Now, let's get into the numbers here. Right-hand column, 1 week returns green across the board. Dow Jones leading the pack here, up 2% on the week, followed by the S&P 500, the Nasdaq, and the Russell 2000, not too shabby, up just a bit over 1%. Take a look here at volatility. It is continuing to sort of depress and come out of this market. You can see now the VIX closing at 12.55, one of the lowest levels we've seen in some time. We'll take a look at that VIX chart in just a moment. Now, it helps that every single sector here did close green on the week. Now, it wasn't quite a superb risk-on rally in terms of risk sectors that you may think of firsthand. So, utilities were at the top of the list here, up 4.18%, followed by financials and materials. And on the downside, it was consumer discretionary, it was energy, and it was technology stocks, all still up on the week, but underperforming on a relative basis. Now, here's the cool thing I think is happening here this week is you're getting more transitions up here in the sector breakdowns. Now, we talked about it in last week's video. One of the key themes and takeaways as we reviewed last week's data was that mildly or on the margins, the data and metrics that we were tracking were improving. In other words, there was more bullish evidence developing last week that gave us some signs of encouragement. And this week is really a follow-through week to more bullish evidence. And indicated by that is our custom smart trend filters indicator that you're looking at here. And what this is basically showing, just red, yellow, green dots. What's the path of least resistance? Who's in control? What do the trends look like? And you can see after a period of red and yellow dots for most of the sectors, we are starting an upswing here. And we see buyers regaining control basically immediately starting at the beginning of this week. So that's encouraging. That's a good sign that breadth is coming back, support's coming back into this market, and we want to see that continue. Now, speaking of market breadth, if we take a look at our favorite measure here is simply 52-week highs and 52-week lows, you can see that this week we also saw improvement here. We see more stocks hitting 52-week highs. We're seeing this ratio start to skew back into the bull favor. That's exactly what we were looking for, what we wanted to see to get more optimistic and encouraging about this market, and we're getting it playing out here this week. Now, next up is IBD. They are a sponsor of the show, so thank you, IBD, for helping make the show possible and supporting the show. This is their top 10 stocks on their IBD 50 list. You can see, again, a pretty good performance this week, pretty much across the board. GCT at the top of the list, still hanging out as the #1 IBD ranked stock for quite some time. But this list gets updated pretty much every day, and you can follow this list if you have a digital subscription. A link in the description of this episode. Let's move right along here to commodities. You can see, again, a mostly positive backdrop here with dip buyers stepping into things in commodity land. Silver at the top of the list, up almost 6.5%, followed by natural gas, DBA, agriculture ETF, gold up almost 3%. So these are some pretty big moves here. Meanwhile, the dollar was pretty much up this week. I was going to say flat, but it was more meaningfully in the green. So it did not continue its rollover from last week. It did stabilize a little bit. The only thing that still seems to be struggling right now is Bitcoin. We're going to look at those charts a little bit later in this video. If we take a look here at Treasury yields, there's not a whole lot of change this week. It was mostly some chop. We started the week off positive from yields dropping, but then towards the end of the week, we started to give that back a little bit. So this is still, I think, a very important chart to pay attention to when we look across, say, the 10-year Treasury yield. You can see that it's trying to make up its mind in the short term. It did roll over from the cycle highs here, and it is, kind of at a interesting inflection point, kind of the slope that Treasury yields have been rising since starting the year, frankly. And so now we're kind of at the lower end where we tend to find Treasury yields begin to rally. So we're going to see if this time's any different, but for now, chopping around and not changing a whole lot. So let's get into some charts now. Let's take a look here at the S&P 500 weekly time frame. Once again, you can see strong progress, follow through, up 1.85%. Very quickly now, again, back to those prior highs, and we've seen now 3 consecutive weeks of higher prices for the S&P 500. If we go down to the daily chart, we can take a look at some of the action we were talking about last week. Now, I admittedly came into this week sort of glass half empty, I guess we'll call it, right? I was encouraged by the data last week, but I figured that we would have more chop, more mess in this range, right? And that's kind of the thinking we talked about in last week's video. We were kind of in the middle of this range here, and we figured that we would just be maybe spending another week or two in this range, frustrating some more traders here and chopping around. But we didn't really chop around. We grinded higher for pretty much day on day every day this week, and now we're suddenly back to the top end of this range. So when we look here at the S&P 500, the clear elephant in the room are the prior highs made in March, or I guess April. No, it was end of March, up here right around 5260 or so. If we start closing and breaking above that level, I mean, it's going to be very, very difficult to want to be short this market or have a negative outlook on this market. For now, we're not there. We're still beneath that high. We've clawed up and recovered, 3 weeks in a row at this point. So again, I do have similar sentiments to last week where we are kind of in this range still. I love the bullish evidence that's improving, so I'm not shorting this market by any stretch, but I would like to see us perhaps digest, perhaps pull back and fill in a little bit more here before the market goes and run to new, attack those prior highs. Of course, the market doesn't care what I think, and that's totally fine, and we're going to continue to monitor and measure markets here one day at a time, or 1 week at a time, really. But when we look here at the technical action, we basically have short-term uptrend, intermediate term, we're kind of still sideways, and we're waiting to see how the S&P 500 is going to react up here around that 5260 area. If we start to roll over, again, I don't think that's necessarily a terrible thing. I'd say let's see if we can consolidate in the top half of this range, right? If we pull back for a day or two, can dip buyers step in around 5150 or, put in some type of higher low like we had back here at the start of the month, frankly, March the 1st and March 2nd. We had a nice kind of higher low put in place. So if this market pulls back, can we get a nice higher low put in around, 5150 or so, find some support, and then go back and test those highs while breadth improves? That would be the perfect scenario. We rarely get what we want in a perfect situation like that, but that's certainly what I'd keep my, my eyes and ears open for. So that's the S&P S&P 500, gotta like the action that it continues to grind up, a little bit stretched in the short term. So I would still say, just know where you've come from and understand your levels. If we go to the Nasdaq 100, you can see a little more of a sideways to upward drift this week. This one's a little more sideways. We didn't cover as much ground here this week. It was more chop, and then we did try and push up here on Friday. So again, you can see we're back to these old levels, though. We're still kind of range bound. We're in this old range here. I do like the fact that we recovered back over 433. So again, I think you got to hand it to the bulls. They did get back some important levels here, and they are, accepting back into this old March, April, first week of April range that we were sideways in for about 6 weeks or so. So there is price acceptance up here. We're back in there, and let's continue to just now pay attention to the prior highs here and then 433 on the downside. So consolidation, I would love it if we could just see that continue to play out here in the Nasdaq 100. And last but not least was the Russell 2000. Again, nice constructive week up. It is, pushing back up into its April range as well. If we take a look at some of the levels we've had on here, we've been keeping this very kind of broad levels drawn on here, and we've been talking about this 190 to 210 range that the Russell 2000 seems to be comfortably consolidating in. Really don't see too much change in that still, even at this point. But for now, we like to see that the trend is back up in the short term, and we are consolidating in the top end of this range. So that is the overall market index action. Let's take a look here at the VIX, which, as we talked about earlier, is back down to 12.5. I mean, this is sinking like a rock here. Just 3 weeks ago, we were north of 20, right? We had this big flare up in fear in the market, with inflation sticking around, being stickier, earnings season, amidst, and the market, certainly got that fear protection, and it has just continued to unwind here and is pretty much of a straight of a line as you can imagine, and it basically closing pretty much right at year-to-date lows, pretty much. I mean, we did have a couple of closes in the lower 12s, but we're pretty much right there. So there's lots of kind of complacency or acceptance at these levels right now. So let's just, again, keep that in mind as we're thinking about risk and exposure at these levels. Now I want to talk about gold as well. So gold here on the weekly time frame, you can see up 2.7%. Beautiful kind of, two-week pullback here. Nice and orderly. Looks like the buyers are stepping in exactly where you'd want them to, putting in a higher low here and starting to move back up. So nice constructive action. Got a nice uptrend in gold here. So have some positions ourselves. Continues to work and perform nicely. Same thing with silver. Silver, a lot to like here this week, up 6.4%. This again also pulled back for a couple of weeks. Buyers stepping right back in. Nice push back up. Again, uptrend, breakout, lots to like here on some bigger levels. I do like the metals, generally speaking, on both sides. Now, here's a look at Bitcoin here. And Bitcoin, I think, is really starting to frustrate a lot of folks. It has done nothing now for basically since March, since the mid-March where it topped out. It has been in this pullback and consolidation mode. It still finds itself, roughly 18% from its recent highs. For Bitcoin standards, it's a pretty tolerable, normal, even small pullback. But I think the duration here now is starting to frustrate some folks. We did have that washout under 56,000. Last week, I was saying, there's a pretty good shot that was the low in Bitcoin. But after this week's action and this kind of rollover here, I want to see us find some higher lows and some support. I want to see us find buyers back in here sooner rather than later. Last week, I said, look, if we can stay over 59.5 or 60K, 59.5, that general range, if we can stay over that, then again, I think we had a good shot at that the prior week being the low for this cycle in Bitcoin. We'll see if that can happen now. We had a nice push off that low. We got all the way up to about 65K, and now we're starting to drift lower, and I want to see buyers step in sooner rather than later. So jury's still out here. I have a position in Bitcoin. Do have some stops now that would get triggered if we do roll over, but for now, remain long here in this consolidation and trying to take that bigger, broader outlook here for Bitcoin. So that is the update there. I think that covers a lot of the major markets. Let's take a look at some individual stocks and then a couple of ETFs. I did want to look at ARK real quick because on Friday we did see a good amount of selling occur here in kind of that growth space, generally speaking. I mean, you could argue Bitcoin, you could throw that right into the mix here. I know it's a little bit kind of a different beast, but you know, down 2.8% here on the IBIT ETF. But if you look at ARK, this was also down about 2.8%. Heavy volume came in here, and we did see some selling. This looks pretty weak and vulnerable. This almost looks like a bear flag, kind of bear channel here that's rolling over and breaking down in ARK. ARK has been in consolidation mode since the start of the year, frankly, and this is looking a little ugly here. So again, I think buyers are going to want to see or bulls are going to want to see buyers step in pretty quick here and kind of save us over $41 before that breaks to a new lower high, or lower low, I should say. So let's keep an eye on that. But that looks pretty rough right now for ARK. You can look at multiple of their ETFs. ARKW looks like a similar picture. Now, it's part of the reason due to some rough earnings we saw this week. If we take a look at something like Shopify, which I do have some shares in Shopify in a longer term account, small position at this point. I would consider looking to add to this. This is not necessarily a trading portfolio, more of a longer term investing portfolio, but Shopify was down, I think 20% off of earnings. Numbers weren't terrible. Guidance maybe not the best, or margins, I think, on Shopify, if I'm not mistaken. But regardless, you're still seeing a good amount of selling pressure here in this kind of growth space. Uber also getting hit on its earnings. Again, had pretty decent numbers, had some one-time interesting investing kind of markdowns, but down 5.7% off its earnings. I do have a position in Uber as well in the longer term accounts, but we saw some weakness, and Disney, right? So there were definitely some earnings plays this week that kind of took the market out a little bit, took the wind out of some of that momentum growth story. Not that I necessarily put Disney in growth, but definitely some disappointing earnings. Now, it's clearly not all bad, and if we look at, say, the Mag 7 here, it was a mostly positive week. In fact, I think Meta is still pretty impressive here. The fact that Meta, again, was one of the worst reactions off of earnings for the Mag 7 stock, so we're down over 11% on the day, and this has continued to kind of just float higher here. There was no continued selling pressure. Basically, sellers got exhausted post earnings, and the stock has floated higher here and kind of filled in the gap. So Meta had a nice big week this week to the upside. If we take a look at some of those other Mag 7 stocks, Tesla, was the only thing that was really negative. Everything else was kind of upward to flat on the week for Apple. So that's kind of the picture there. Nvidia, we've got earnings out in a few weeks, so let's keep an eye on that, but we still have some time before then. And we have the market that would be looking forward to perhaps CPI data next week. So more inflation data for the market to chew on, price in, and try and, front run what the Fed is going to do for their rest of this year in terms of rate cuts or staying pat. So that is it, I think. That's kind of everything I wanted to talk about. Felt like a choppy, kind of sleepy week, but still made some good progress to the upside. So you can't really knock it. Good, bullish evidence still kind of improving under the hood. We like the sectors that are starting to pick up. We like breadth that's starting to pick up. So we want to see more of that. Little bit of digestion here while that stays strong. Be the perfect recipe here as we digest through the middle of May. So that's what I got. Hopefully this video was helpful. If you enjoyed it, feel free to subscribe to our YouTube channel. Make sure you stay up to date with all of our latest. We got lots of cool links in the description of the show, so check those out. And I hope you have a great week and ahead of you. So take care, enjoy the good weather, and we'll see you back here next Friday.